Hello and good evening. This week's been a wild week for gold. As I correctly predicted in one of my last videos, gold went absolutely crazy this week. You can check that video if you want. Due to these macroeconomic factors, gold has done very well. Prices are at record highs, but today we're going to go wider. We're going to talk about what's happening all around the globe. Central banks, politics, wars, shipping lanes, and country by country stories that matter. I'll put links in the description of the sources so if you want to investigate further. I'm not doing any editing in this video, so feel free to watch this have this on while doing something else. Since the market opened on Monday, gold shot to fresh records. Stocks wobbled, long bond yields in the UK and Japan, and the fight over America's central bank heated up. We also got a big structural story from the World Gold Council, plus new trade data out of Australia and Switzerland, and fresh local records in India and Pakistan. Let's tour the map. So we're going to start with the good old United States. As we know, a very important place in the world for global politics and the world of gold. In the US, gold's story wasn't just about price. It was, of course, politics. What else would you expect for now? The White House's push to fire Governor Lisa Cook turned into a court fight. Why should gold watchers care? Well, as you probably know, it raises questions about the Fed's independence. And when people worry about that, they look for safety. And where do they put their money? Into gold. And we love that because it makes our gold worth a lot more. The Supreme Court is now being asked to referee bigger questions about presidential power, including trade and tariffs, which is also another thing that can shake markets and then further push investors towards gold. Only fantastic for us, of course. The theme here is when the market is wobbly. Whenever something crazy is going on in the market, this tends to be good for gold. On top of all this, add in a Senate hearing for Trump's Fed nomination. All this is more noise right before the September rate meeting, which I'll probably cover on the channel as well. So you've got a recipe for nerves. Again, nerves usually help gold. I'm sure you're spotting the theme here. Let's look at the global market pulse. Quick check. Midweek, gold set new highs, and then eased a little bit as some traders took profits, as you should, ladder out, as I would call it, but it depends on what your strategy is, not financial advice. And these traders took profits ahead of the US jobs data, which I might do an explainer video on and maybe cover it as well. So subscribe to the channel to get all the latest news. Anyway, that's normal at records. The traders took profits. The bigger picture is still strong safe haven demand. I know I've been saying that a lot, but it's true. Especially for now. So, the World Gold Council, which I'm sure you've heard of, I'm assuming you most likely heard of, launched a digital gold institute this week. This is essentially about modernizing how gold trades and settles. In other words, making gold easier to invest in. Think like cleaner pipes, better transparency, that type of thing. Fewer frictions to put money into gold. It's not necessarily price hype, it's more just market plumbing. And over time, this is going to widen participation. Another good thing for gold. So gold's looking pretty good. I'm sure many of you people watching this are probably doing quite well with your trading and investing during this bull run. To Europe. In Europe, long-dated UK bond yields jumped to late 1990s levels on deficit worries. When big, good old boring bonds wobble a bit, the safe haven talk then picks up. And that's another good sign for gold. Meanwhile, in Switzerland, the world's gold refining hub shipped a lot more gold to the United States in July. That's another fresh sign of strong Western demand feeding into the market. Asia. Japan first. In Japan, 30-year government bonds, I know I'm talking about bonds again, but it's always relevant to gold and the market in general. Government bonds spiked to the highest in years. Higher local yields and a weak yen keep Japanese savers on edge. This is one of the factors that helps explain why gold has been so popular there this year. India next. Local futures on MCX hit fresh lifetime highs again this week. As I've said before on the channel, India is a giant gold-consuming country, especially for jewelry and coins. So it's very important to note new highs there are very important for global sentiment. It's always important to do a sentiment analysis for anything you're trading, but not financial advice. China. Regional market wraps kept pointing out that gold's push to records is happening alongside a softer dollar and ongoing policy worries. All the themes that Chinese investors watch. Now to the Middle East and shipping lanes. Shipping risk on the Red Sea flared again. And whenever something like this flares, that's often a good sign for gold. This week, the Houthis said they fired at an Israeli-linked ship. The missile reportedly missed, but the message didn't, because insurers had already been quoting higher war risk premiums after deadly incidents earlier this summer. This kind of stuff keeps a geopolitical bid under gold. There was also some movement in Gaza diplomacy headlines. Of course, this is always something you see in the headlines, but you never know if it's, what's going to happen. But Hamas repeated it was ready for a broad prisoner for hostages deal, which Israel dismissed. But until there's a real ceasefire, the risk premiums tend to stick. Now to Africa. Ghana's message to investors. In Africa, Ghana's mines minister used a big mining conference this week to reassure investors after a dispute stalled the Black Volta project. It's a reminder, policy signals in producer countries can shift the long-run supply picture, and the market watches that. It's always good to know what the market sees and what the market's watching and what the market's thinking. To Australia, where I'm based. Yay, Australia. Australia's July trade data landed this week. Non-monetary gold exports rose, while gold imports fell. When gold shows up in national trade prints, you know, flows are busy through Perth and the refineries. By the way, Perth Mint is a really good place to buy gold. I bought gold from there before. Also, they have an ETF, a gold ETF called the PM Gold. If any Australian investors watching this, they have the PM Gold ETF, which is backed by the Western Australian government. So a pretty safe place to buy gold digitally. I digress, as I often do. Before we finish up going around the globe, let's go to Pakistan. Pakistan's local gold price hit another record this week, tracking the global gold move and currency swings. Notice I'm talking a lot about currency because currency is really important to the price of gold. And that links to government bonds, but I'll get into that in another video. I'm just trying to give little nuggets of knowledge here, help my subscribers make money. Not financial advice. This record in Pakistan is important for small savers there because they use that as sort of a safety valve, as many people do with gold. Let's talk about central banks and funds. Good news for gold is the central bank story is still very powerful, even with these record high gold prices. Reporting this week highlighted how official gold reserves have climbed for years. I actually made a video about UAE central bank. I should have released that, but anyway. Official gold reserves have climbed for years, and this structural bid is why part of dips have been shallow. This highlights exactly why I trade gold the way I do. Always understand the macroeconomics. Do not rely on indicators, I'm telling you. Because if you just rely on indicators, you would not have understood that there's a reason for gold having shallow dips. That's why I was so confident in gold, but not financial advice. Anyway, onto the investor side. The big US gold ETF added metal again, with holdings at the highest since 2022 in midweek data. Let's do a quick metals cross-check with copper and silver. As you might know from previous videos I've made, it's important to understand what copper and silver are doing for the broad market in general, but also for gold. I've discussed copper and silver ratios in other videos. I recommend you watching those. So silver ripped to a massive 14-year high this week, benefiting from both the gold halo and tight industrial supply chains. It's important to understand that move often shows up when investors start broadening the precious metals bid. So on copper, headlines are a bit noisy. Tech delaying big approvals in Chile, while markets yo-yo on China's growth signals. Copper's role as the grid and data center metal means any policy wobble in China or supply hiccup in the Andes bleeds into the macro risk conversation that continues to support gold. Thank you for watching, and please subscribe to stay up to date with other gold news that I'll keep posting. Thank you.